Hello everyone, my name is David Varsimashvili. Are compliance regulations becoming so complex that they are killing the businesses? This compliance is no longer a side function. It's a core operational requirement. AML assessment is no longer just a regulatory requirement. It's a fundamental necessity to safeguard organizations from financial, legal, and reputational risks. Do sanctions work or not? The answer is both yes and no.
Hello everyone, my name is Victoria Scholtes and I'm the founder of the Scholtes Institute. And recently we had a really good conversation with a good associate of mine, Goran, about middlemen and how many players are in the fintech and how complex this is. Where do we need that many middlemen, ISOs, introducers, gateways, payment orchestration? So after we had this really good conversation, I thought that it could be very valuable to start talking about this publicly as well. And that's why I brought Goran to the Scholtes Institute webinar series to actually go through all of those nitty-gritty details to really understand who owns the payment stack. Today is going to be a very, very exciting conversation because I think that this subject is not that much discussed as it should be. And today we are shedding some light about the importance of the ISOs when an ISO becomes an acquirer. So I think that there's going to be a lot of important information that even I don't know after working in this industry for 20 odd years. So welcome, Goran. Thank you very much for joining us today at the webinar and allowing me to pick your brain on this super interesting subject. Please tell us a bit more about who are you, how did you end up in payments, and a bit more on the journey that how do you know all of this important information that you're going to share with us today?
Hi, Victoria. First of all, thank you for having me. Yeah, like you said, we had a lot of interesting discussions before. Who am I? Well, currently I wear many hats, but currently I'm Chief Revenue Officer at Field 39. We are a payment infrastructure company, something that I will talk about a bit later, where we perfectly sit in between all those elements that you mentioned at the beginning. I was CEO of a core banking, digital banking company for several years. So I did a full circle of everything, how the money goes from the initial tap to landing to somebody's account and merchant accounts, etc. And then I came back to payment here in Field 2 years ago. Most of the ecosystem stakeholders just care when the money hits the wall of bank, and then what happens later doesn't matter. It's important the transaction goes and then they get the reply, which raises importance of your chief payment officer, definitely something that becomes more and more important. And as we progress today, we see the payment and banking line getting slowly blurred and erased, with all these initiatives. Not only Europe, US, everywhere we are talking about direct banking transfers and everything. We're talking about alternative to card payments in the back end, in the Rails, we're talking about stable coins and everything. So it's becoming one single pot. And I'm really excited to talk about this today, and especially this main topic of intermediaries and the whole ecosystem, which has been mostly unchanged for decades. And now things are really, really changing and really fast pace, especially with AI and everything. So, I mean, shoot, I'm expecting you to lead the way and to ask questions about it.
Sure, be careful what you're asking for because we have a lot of questions as usual. We collected some questions from the audience, but I also added a couple of my own questions in the mix because I just really wanted to have your opinion about this. And as you said, we are getting more and more in this complex world of payment. There is somehow an inception of payment, as I like to call it, as a gateway, which is reselling payment orchestration, which is connected to an acquirer, which is then using a different tool. And somehow the users don't really understand how complicated today fintech is and what is the route that their money actually taking from getting to their customers' pocket to their bank accounts. Before we move even further, let's put things in perspective because I think that there are a lot of contradicting understanding. What is an acquirer? What is an ISO? What is a payment service provider? What is a gateway? What is a payment orchestrator? Because I get to know some people who are mixing everything, that whatever is between the acquirer and me is a PSP. Yes, but let's put things in a bit more context. What is an ISO and how are they different from, other middlemen in this payment routing?
If we talk from European perspective, ISO or independent sales organization is somebody who is registered as a merchant service provider with car schemas, but without any cumbersome licensing, special compliance requirements and everything. And they're basically what the name says, they are resellers of payment services on behalf of one or more acquirers on the field. So, like a traveling agent, call them like that. So they're selling whether e-commerce or car present services on behalf of acquirer. They get a cut out of that. So either from a transaction basis points or in some fixed fee. And they usually don't own, from European perspective, they don't own anything. They don't own any infrastructure, even the payment application, the terminal is from somebody else, the gateway is from somebody else, from the acquirer or some intermediary. They usually don't own anything. There are ISOs who are reselling, like they're having a white label gateway, but they're reselling some third party. Usually they don't have a tech stack. As they move to having a tech stack, they're becoming a payment service provider. The PSP actually is involved in the processing setup of everything. And usually they own like the full front end. Like if you talk about car present, PSP has a payment application, the terminal connected to his gateway, and then they're connected sometimes only to one acquirer, where they are then solving certain problems for those acquirers, or they even have multiple acquirers, which is a multi-acquiring model, which is popular in recent years in Europe. But still, PSP doesn't sign a direct contract with the merchant. The merchant is still the merchant of the acquirer. Still, in European framework, they don't need any license, except they need to have a PCI DSS certification, which is like a mandatory security layer that enables you to process card transactions in behind. Level above that is a PI, like a payment institution or PayFac, which requires a certain licensing, meaning they hold the funds. So ISO or PSP, they don't touch the money at the end of the day. So ISO doesn't process anything, PSP does process the transaction, is part of the ecosystem, but still money is between merchant and the acquirer. If you move further to payment institution, then you move money. Then you can sign with a merchant acquiring contract, and actually you are paying out the money. And you have certain obligations, certain part of compliance, licensing, etc. Each of these tiers introduces another level of complexity, another level of cost, but at the same time, you are receiving a bigger part of the cake, which is natural. The more you provide of the entire ecosystem, the more revenue you can you can get, and other benefits above that. And of course, the acquirer is the highest, most complex tier of everything in payments, or processor. Like we call it acquirer in Europe. Americans say processor, but let's say acquiring processor covers everything. You have a license. You are directly connected to MasterCard, Visa, or some other card schemas, depending where you are. You have their license. You move the money. You are in charge for everything in terms of that last mile of payment. And of course, if you talk about numbers, we have acquirers are the least one that we have because of the complexity and the cost and responsibility that you have in that. And then we have PIs, PSPs, and ISOs. You have tens of thousands of ISOs at the end. So ISO, PSP, they don't touch the money. PI touches the money in the process and has a certain level of responsibility. The acquirer, full stack. They do everything. They are not the bank, but yeah,
Yeah,
that's in short.
yeah, usually, as we know, the higher the responsibility, the higher the risk. Obviously, the higher the
Yes,
profit as well. So
exactly,
it's the same with
exactly.
everything. So I think it's super important that we are talking about it. As the webinar says, the main subject of that, who owns the payment stack, but what is exactly the payment stack, and who are those players who are all touching our money in between? So the first question is really about that. You think the ISO model is broken or just less profitable? And in your understanding, what qualifies as an ISO as opposed to a simple gateway, for example?
Yeah, when we talk about that, I think the core question is, like you said, in your opinion, what is ISO? Because the naming convention is something, it's a first obstacle when we talk about payments. ISO is really super significant player on the US market, especially if you are multi-market, like you are working in Europe and USA. And having the same conversation, same sentence in Europe and the US has a completely different meaning. ISOs are the one who are driving the payments. They are contracting merchant on behalf of what they call processors, which is, for example, in Europe, completely different meaning. But by processors, they mean acquirers, like large players, global payment, and ISO. So far, that was the preferred model. I mean, you have ISOs who have like tens of thousands of merchants without having actually any kind of physical connections to them. They just resell something to them, sign papers, and that's it. The same model here in Europe is, let's say, less popular, but it's rising in popularity in the recent years. It was popular in e-commerce, where things are much, much easier and much less complex. But when we move to card present world, this is when things get complicated. And this is the model where traditional ISO is slowly looking to upgrade, because as of today, they don't hold a really strong connection with a merchant. They don't have that value as a company on their books. They're pure resellers. But with adding an infrastructure layer in between the merchants and whoever is in behind. In Europe, usually it's like a very simple stack. You have a merchant, you have potential intermediator like a PSP, and then you have the acquirer, and that's usually that. On the US market, you can have merchant, you can have this ISO or PSP, and then you have one gateway, second gateway, third gateway, processor. That you can have 4, 5, 6 layers of everything. So, merchant doesn't even know who is the acquirer in behind. Why are ISOs looking to expand? Well, to make this connection with a merchant more firm, because if they control the actual physical layer of payments, the first front-end physical layer of payments, they have a better connection with the merchant. They have more freedom in behind. They can even change the acquirers that they're reselling. at the end, or they can multi-sell. They can have a couple of acquirers connected to their front end and sell that to their merchants. They can upsell. So the value chain is much, much more, let's say, significant, more profitable for them in opposed to not having anything and having only papers. That doesn't come without, a consequence or a cost, of course. It's not the same if you're just signing contracts in between and if you are handling actually something. Of course, the responsibility becomes much larger, but the price is bigger. You get more revenue share, you get more money out of that relationship. And as I said, at the end, you have more stickiness with the merchants and more value for a company of yours. And we need to look at it differently for Europe and US when we talk about this. Europe is a very, very fragmented market when it comes to payments altogether. And many, what we call in Europe PSP, is somebody who doesn't have the licensing burden and everything, just has the, let's say, hardware infrastructure that can connect merchant and the acquirers. One of the important issues they're handling in Europe is like, for every market you have to do something if you're having a single integration. But if you own the infrastructure, then you can cut time to market for merchants, large retailers, or whatever by providing this piece of stack.
So the more danger you take by holding the funds of the merchants or even processing transactions on behalf of the merchants, you're not just transacting as a middleman, then obviously that's when you get the biggest piece of the pie.
Yeah. And that answers part of your question. You said, okay, what is the difference and why are ISOs moving into that direction? Because like you said, more risk, more reward. We have to admit that reward in general is becoming smaller and smaller in the payment world. Like if you compare today and 20 years ago, margins are super thin, transaction fees are really, really small. And today they are under pressure from non-card payments, who are especially in Europe. So yeah, they're looking how to get more revenue while balancing risk and investment at the same time.
I agree. And the interesting thing is that we might use a lot of different expressions and names to the same thing. So basically, we've got the technical layer, which is just transacting the transaction or helping with the resale, but it's basically just an introducer through a tech layer or connector. But as you said, they need the PCI DSS. And then there is a financial licensed institution with a PI, payment provider license, or any EMI license, any other financial officially recognized license, which allows them to hold the money on behalf of the merchant. But as you said, it's super complicated, differs from jurisdiction to another jurisdiction. Let's see the second question. What is the biggest misconception about owning the stack? And I'm very curious about your opinion on this, because I think owning the stack could be defined in multiple ways, but even the misconception could be very interesting to hear it from you.
Yeah, usually it's looked upon like something super complicated and expensive and something that you need tens of millions to invest to have it. That was perhaps before, but I'm talking from a perspective of Filtered and where we offer it in SaaS, where owning doesn't necessarily mean like actually owning a piece of metal rack with servers and walls and alarms and everything, but owning means also having that part of the ecosystem under your control and connecting your merchants to that white label technology stack. It's much, much easier to do that today than it was before. The misconception is still that is considered like a spaceship, but things have moved significantly in the last decade. I mean, we are a living proof of that. Clients that we have, for example, 20 years ago would never think about going on their own, owning this piece of stack, dreaming about having this level of control, independency, and more revenue. Today, with solutions like we have them, it's a completely different story. And the story doesn't stop there. I mean, today you have solution for all tiers. Even the acquirers, they don't have to build their own tech stack. You have cloud providers with technology stack for acquirers. So yeah, it changed a lot. It still holds the same level of responsibility and everything that you need to have when you own such a piece of tech stack, but it's not a nightmare or a horror anymore. It's much easier. I think this is number one misconception in that. And the second one is this entire regulatory perspective. This is what scares the most, usually ISOs or PSPs wanting to enter. And not only in our case, but we hold a PCI DSS, for example, and that part is completely away from the provider. And if you don't go into higher tier of PI or acquirer even, then you don't need any licensing. You just need the tech stack, process, and that's it. You go and you sell it. And this way you avoid many things, but we can talk about that later during the session.
I think one of the scariest thing, what I learned early on, that how easy it is to act as a fintech company, because there are a lot of white label providers who are giving you the full gateway with the predetermined integrations, with the PCI DSS compliance certificate. So all you need to do is just pay the setup fees, create a website. They take care of everything. They set up for you the website. They set up the whole gateway facilities. They give you the pre-integrated providers. All you need to do is just get out and start selling it to the merchants.
Exactly.
So the merchant
Yes.
is signing an agreement with you as the technical layer. Not uncommon that you're charging for this 0.5% or even 1%, but everything is coming from this third-party independent white label provider. So you're just acting as if you were a fintech company, but actually you're just white labeling everything, the customer service, even the compliance, everything. So even one man bands from a bedroom ad hoc, they can actually set up a fully functioning gateway business, ISO business with the pre-integrated connections for as cheap as around 10,000 euros minimum monthly fees and start acting. And maybe that's the reason that we see a huge surge of fintech companies out there. 200 different pay this, that pay, different payment provider companies who are calling themselves the new fintech companies, but it's actually the same thing with different front end, and the merchants don't even know that. So I think it's important that merchants are also educated at least on the basics to understand what to pay attention to. There's nothing wrong with that, but now we're talking about it, it might actually help the merchants to start asking questions. What kind of company are you? Are you white label? Yes. Who is owning the responsibility in case something goes wrong? Because you're also just a reseller of a technological provider, so the uptime and the integrations and the customer service might not even come from your company. You're also just renting these services and reselling them as well. So I think it is very important that we are talking about it. We are putting the expressions in perspective, and we educate, the merchants about that. Who is actually handling your funds, and what are the actual routes that your money is going?
Yeah, I would just like to add. I agree, but I would like to add that what separates boys from men is the e-commerce and card present part. So what you are describing is really for the e-commerce world, like you said, you have millions of ISOs acting as payment providers, just pushing boxes in between. Card present is a different animal and a different game. It's much more complicated and complex, but we see a growing trend in that area also, where, for example, like we have a couple of cases where ECR providers, the cash register providers, who actually are perfectly positioned. They're already there with the merchants. They have a field presence, the operations and everything. And now they're turning to us or to these trends in order to increase revenue. They're becoming PSPs. They don't have to handle the PCI DSS. They don't have to do anything. They have the operation set up. They hook up payment terminal, application, gateway, acquirers. This is also, we have a case of multi-country ECR providers where they use our front end and then they connect in one country to one acquirer, in another country to another acquirer. And they have a very nice and neat bundle for the merchant. Cash register, card present, e-commerce, sign it and go. And this is, simplicity is what world is looking for today, and this is becoming more and more obvious in our line of business also.
And this is where we are going towards, right? With the AI, and you're just vibe coding a full stack in one night through Claude, and all of a sudden you have yourself a tech company without any intervention of any development team, or but even just get to this one-stop shop and then set up everything for yourself. I think it's good, but it does come with a bit of a caveat that if it ends up in the wrong hands, then it might actually cause some damage if the merchant is unaware what is happening at the background.
Definitely.
But Goran, tell me, what's happening? When does an ISO become actually an acquirer? Is it just an acquiring license that they are missing, or what else do we need to add? Is it the full customer support? Is it other licenses? Is it tokenization? Is it data security? Is it fraud tools? Is it what is it?
All of that. when we say license, we don't refer to a piece of paper that you take a test and you are now the acquirer. Having that piece of paper or PDF actually means all this that you said it behind. It's not the highest level of what we discussed earlier for nothing, because when you are acquired and when ISO becomes acquired, for example, they need a critical mass. So you don't go into becoming an acquirer if you have 10,000 terminals or point of sales or merchants. You need a significant number of transactions to make it viable, to make it work. Why? Because when you become an acquirer, you handle everything. KYB, in this case, which has multiple layers underneath, AML, sanctions check, everything, verifying the entire business. You handle the fraud prevention. You need to have all this in place. You need to have connected all of this with a very good compliance department that will handle all these things. You move the money. You need to have a deposit. You need to have, a capital that can support that line of business. Where to continue? Everything regarding payment business is under your risk control, chargeback processing. There is so many things that probably merchants are listening and do not understand what you are talking about. But this just to show the sheer complexity of being an acquirer. And that's not an easy step. And when we talked about those tiers, moving from ISO to PSP is not that significant. Even moving from PSP to PI, it is a bit, still you need the threshold of responsibility goes up. You need a certain capital. You need reservations. But from PSP to acquirer, from ISO in the US model to acquirer, wow, it's not like this. It's like this, and you are fighting against. We have global payments. We mentioned Shift4. Those are companies that are. Payment is a game of volume. And it's the economy of scale. And somebody who is an acquirer who is processing billions of transactions, not in volume, but billions of single transactions, you can imagine the economy of scale they have compared to some, small fresh acquirer underneath. We could go into BIN sponsorship now and then somebody writing others acquiring license, but we will not complicate things. But it's a decision it's a game of scale. That is what I would say. When does ISO become an acquirer? When they see that all this is worth it because of the volume that they have and they can have, then this game changes.
What I understand from this industry is that oftentimes we share the profit, right? Or at least you get the percentage out of the profit. So the acquirer seems to take all the responsibility, all the blame, all the setup, the customer experience, the fraud tools and everything to maintain the license and therefore obviously maintaining the whole financial system around us. But with the surge of these newly founded fintech providers, white label gateways, ad hoc payment providers here, there, basically I can see that there might be more money concentrated on their side, although they might take the less responsibility. So I see that it could be some kind of like a V when there are a lot of resellers connected to less facilitators, payment institutions, as you said, someone who's got a license, but there are even less acquirers at the end who are actually doing those transactions, executing all of those payments, and therefore taking the full responsibility. Hello everyone, my name is Victoria Scholtes and I'm the founder of the Scholtes Institute. Startups fail. And if they fail, most probably they are failing because they don't have the thought out and proper channels for payments and banking.
Hello everyone, my name is David Vartsimashvili. Compliance is no longer a side function. It's a core operational requirement.
Hey, welcome everybody. I'm Marcia Klingon-Smith. Instant payments is transforming the way money moves all across the globe, across all the different industries.
So even though that, the money is obviously concentrating in the acquirer's hand, as you said, that bigger the volume, the bigger the profit, but I can still see that that's what could give the inception of payments of a gateway reselling, and then basically that's what you see, that a lot of front-end providers eventually just channeling your transactions to those handful of acquirers. What do you think about this?
Yeah, definitely, because the acquirers are becoming, what banks are streamlining for a couple of years now to go into service providing mode, actually providing the basic service. Because more and more acquirers are switching from their, let's say, traditional model owning the full end-to-end process to this this is why we have a surge of all this, let's call them payment facilitators, ISOs, PSPs, whatever. Because acquirers are moving day-to-day operations to that side. They don't need to handle that part anymore, which is very demanding in terms of FTE and everything, And they concentrate on this heavy, complicated things, compliance, fraud, everything that the transaction goes smoothly. And we see it. We have a couple of clients where they used our front-end tech stack because for example, they use their own payment application and payment terminal for card present, but acquirer doesn't want to integrate directly. So they say, find a gateway and we'll do host to host. That's more simple for us because we don't want to handle and manage thousands of point of sales and handle the keys and everything that goes with it. We want one wire and you handle the rest.
Yeah.
And this is the rising trend, definitely, because it's complex, definitely, to do operations day to day for payments. And this is, they can focus on this part, and then they are willing to share more revenue with that front end because they can still have a good revenue and a lot of savings by eliminating that daily operational layer.
We talked a lot about the channel of the funds, but we haven't mentioned really the complexities of going abroad. What do you think? What is the biggest bottleneck in multi-market acquiring when you're handling a bit of APMs, different regulation, different customer behaviors, different fraud rules? What are the usual problems around processing for multiple countries and multiple jurisdictions?
Where to start from? Jurisdictions or markets? Yeah, because, very, very transparent and openly. We are Mastercard Visa world, okay, and we live. If you talk our payments, we are living under their roof and according to their rules, and they have a world map of their own. So, and if you do everything in one jurisdiction of Mastercard and Visa, but it doesn't mean a thing if a country is not part of that part of the map of Visa and MasterCard, you need to acquire all the licenses and everything for that another jurisdiction. This is one, let's say, helicopter view part of the problem. Let's say you're a retailer, to address your question on the bottleneck, and you want to be present in 5 countries in European Union. You have Germany, you have Croatia where I am, you have France. You go to Germany, yeah, you accept MasterCard Visa, great. What about Girocard? You go to France, what about, carte blanche, or what's the name? What about, how do you accept local non-card payment method? Do you accept Bizon? Do you accept Vero, which is coming? And this all complicates things. And this is why this principle of having your own front-end stack as a retailer even is becoming helpful. Then you go a bit deeper. Then you have the FX problem. You have euro, you have kronas, you have this and that. Then you have the FX and how the money moves. If it's in one country, in one currency, is the simple scenario. If it's not, you have different problem. You have the interchange, you have the schemas, you have everything that comes with that. This layer of complexity. ONA, SOFAs, all those terms that are confusing but mean money at the end of the day. And multi-market is, I would say, the concept of being a multi-market retailer, let's say retailer, like a merchant who is present. Let's just focus on Europe. Don't want to touch US, Europe, because that is even more complicated, and very few of them are able to solve that problem. Perhaps with a couple of acquirers who have unified their stack in US and Europe, but still rules are completely different. Now let's focus on Europe. Let's not even complicate by going outside of the EEA. We see it in multiple industries. We had an interesting case with a vending technology provider who actually had this exact problem. They have everything, but in each country where they need to integrate local vendor, they need to local acquirer, local device. Each market they're coming to, they need to solve the problem again and again and again. This is becoming the biggest bottleneck in this story. But if you own the front-end stack, you own the device, you own the omnichannel, you own the gateway, and you just plug into the multiple acquirers, and you can ship your front end in each country and just do the slightest form of modification for each market. And this is the principle that retailers are absorbing more and more. It's not a coincidence that all the large retailers are having their own payment companies and their own payment infrastructure. The retailers that are multi-country present, because that's the easiest way to have it centralized and then to, address each market only from the backend infrastructure side and not build full end-to-end on each market where you are coming, because, time and money, simple as that. We could go for hours now and talk about, the issues of interchange and everything and domestic, and yeah, there are a lot of bottlenecks. Payment is complicated, definitely.
It is indeed.
So,
And my favorite thing is when, I sometimes go to these startup meetups and talk to entrepreneurs who are always thinking that, when you're starting a startup, you always need to test if they buy the product. So before you are even doing any development, just go out and start collecting funds to prove the concept. And I'm like, start collecting the funds. How? You need to have the relevant payment method, right? You can't just go there and think that, okay, I just put a concept in place and I just set up a website and then start collecting funds for a non-existing product like this. And that's such an interesting conversation I'm having over and over again, that you do need to have a bit more understanding before you are even testing a product, that the banks need to really understand what are you selling, who is paying for it. If they don't get the product, what are the repercussions that they can do on you in forms of chargeback, or will you refund them properly? So it is, as you said, it's like super, super complicated. You can't just go to a new market and start testing the waters without having anything, because the banks won't even allow you to do that, right?
I mean, I'm going back again to the question. Payment is a game of scale and game of
Yes.
volume. Yeah, you can have a super simplicity, e-commerce especially, even in some cases in card present, but you will pay a lot for that. And you will be very, very, very restricted. And if you are selling like five boxes of something per month, you don't care. And I was working at that time with the largest vending machine cash acceptance devices provider in the region, multi-million market, covering 50 million people on the market where they're present. And they wanted to start with the card acquiring. And, I was running the payment department in a large company there. And this was one of my initiatives to bring, at that time, it was cash only industry. And he came like, okay, can we have that device? I will buy them. I don't know, 10,000, we'll screw them in and then we will start accepting cards. No. We have to choose the device, the acquirer. At that time, it was really, there were not a lot of foreign acquirers and PSPs. And we need to certify. And he was like, what are you talking about? Like, with cash, I buy a device which is certified, I plug it in and, it works. I said, it doesn't work like that with cards. And it was really, hard to understand. And it is hard to understand from somebody, because it's very often it seems like, we are so complicating. But I always give an example. I mean, you have a card. You are now on Malta, I'm in Croatia, doesn't matter. We can switch places. We have our cards. We don't care, Victoria. I'm coming to Malta, eating a dinner, paying with my card. I don't even think if it's working. I know it's working. And if something happens, if somebody tries to scam me, I will go to my bank and I will say, okay, this was wrong. I didn't do it. And I will get my money back in most of the cases. And that interoperability and security behind it is what needs money, needs cost, needs something to, and needs this complexity. Because, if MasterCard says, I'm approving you, you can pay with that card at this point of sale, then you, as a consumer, are confident and safe that you can do it. And that has, let's say, consequences in complexity in behind.
That's true. With great power comes great responsibility as well.
Yes.
And I think it's all down to the regulator, who is hiding our hands and doesn't allow us payment providers to do whatever we want. But why certification still slowing things down? And why do we still need certification, even though that we like to talk about mainly in Europe that innovation is broken because of the regulation? How can we optimize this? And what are the different certifications that you see that slow things down? How can we avoid this?
I'm pro certification because I'm in this business and as I told you, I did the whole circle and, inside out and everything. So we go a little bit into how the card payment works actually. What does it mean, MasterCard and Visa schemas? So when you tap a card, let's say tap, don't go anymore, insert or whatever, we tap today, any card. On a point of sale, let's talk about card present, because certifications are mostly affecting the card present, right? We have also on e-commerce we have those for acquirers, but let's focus perhaps on this certification for card present, which is really cumbersome and the bottleneck for many multi-market approaches, because it's per application, per device, per acquirer, per country. And you have a setup that works in one country, you move it to another country, you need to again go through the whole certification process. And when the transaction with the card, you are in Malta, I'm in Croatia, and my card, when it hits your acquiring processor, then it goes to the schema, MasterCard or Visa, and then goes to my issuing bank. When that transaction hits the global network, it needs to be standardized, it needs to be according to the rules which are defined so that everything goes smoothly, it doesn't break the system, doesn't do any fraudulent activities. And this is what the certification is for. And also because of what I told you in my previous answer, when I go to Malta to that restaurant, when I tap my card, I know it will work because it's certified. I have a paper that confirms. If we don't have that, then we are just looking on working on trust. And if you don't have that, you can break even the acquiring processing system with some fraudulent activities. Let's be honest. So there's, especially with card present, besides this L3 certifications, there is a lot of complexity on security, but there is a lot of things going on in behind.
Yes, and it differs from area to area because even if I'm tapping my little European cards on the Japanese POS machine, it might not go through, or I can't use my card in a Russian smear system, for example, or if I'm going to Latin America, then they don't even know how to even, accept cards. They've got their own Boleto and Pix and whatever payment method. So
even in the US, you'll have problems, definitely.
Yes,
Unless
exactly.
do not talk about South Korea, where you can forget about your cards. We still have interoperability issues, but majority of, let's say, of world is more or less covered. Europe, especially with that. Yeah, there are still things that are disconnected altogether.
So how can one platform handle the full regulatory fragmentation? How can one platform actually be suitable for this, and make sure that I'm the merchant and I just want to sell for the whole world and everyone in the world? Can one platform actually handle everything, or do I need to get a different provider to Japan, different to China, different to Brazil, and different to Germany?
You know how it can work. You need to own large part of the infrastructure and then connect to multiple providers in those markets. There is no single end-to-end setup, at least I haven't seen it yet, that merchant goes, certifies, and he can go all over the world and use it. I don't know. Even with some really large acquirers today who are multi-market present, they're in US, they're in Europe. I mean, we worked with one large acquirer who is both US and Europe, and we did integration for Europe, and we had to do integration for US market, although the name is the same. So that's what you are describing is like a holy grail of payments. In card payments, that's alternative methods could perhaps achieve that. If crypto would be the asset for payment, that could at the end of the day work. But still you have money for Victoria,
Yeah.
Whereas the issuing side, the owner of the card or the payment instrument, whereas the recipient side, it needs to sync, the money must come. If it goes through 7 different steps, then it's becoming expensive. So there are nuances to that. At the end of the day, as a merchant, you need to get your money. If somebody takes you 10% out of your fee, perhaps you're not earning anything. So
that's right. The theory of everything doesn't exist, right? So you just need to see what you're winning and what you're losing, right? You might have great fees, but the integration is horrible and the acceptance rate is bad. Or you've got really nice, secure transactions. Everything is tokenized to the dot, but they settle once a month. So you always need to see what's the trade-off here, right? And optimize it. But as you said, it's super, super complicated.
Yeah, it's super complicated. But we don't want to scare people away. Yeah, it's super complicated is behind. What's the most important thing in payments is that it's super simple on this, receiving end of the end customer. So you see how complicated it is, but I say we are the industry where our main goal is that nobody thinks about us and nobody knows about us. We must be invisible, because if they think about us, something is wrong, something is not working. Because the payment, the definition, the worst part of a purchasing process is payment. Nobody likes it. Nobody wants it. You don't want to depart your money. So if you are doing it, let's make it, quick, and do not think about it at all. And this is where the technology advancement is working on the past years. And we had, perhaps there were some initiatives that solved some of the problems that you have mentioned, like, this multi-market or whatever, but they were super complicated on the end customer, and it doesn't fly. I mean, if I need to push the button, hold my ear, hold my nose, turn around and do something, I will not pay with that, no matter how good it is. So, yeah, nuances.
Yeah, exactly. You must work in payments because you like challenges, right? But then you've got a lot of opportunity for improving things, and
Exactly.
there are a lot of flexibility of this industry to optimize flows, to come up with some innovation which benefits both the merchant and the provider, which is safer, quicker, faster, better. This is what we have seen, for example, with the stable coins. Now we've got an extra layer on top of the slow and broken layer, which is making things much easier. So there is room for improvement. It's just you really need to figure out how things work at the background just to be able to build on that.
Yeah, this is where many of those who are trying to innovate break their teeth, when they hit the complexity wall of what's happening in behind altogether. And payment is area of many innovations, and especially in the last 10, 15, 20 years, because again, it's money. This is the money that makes the world go around. Everything is in payments, and everybody is looking to find the next big thing to improve, to make it cheaper, faster, better, more interoperable. And especially now, the last 5, 6 years, stable coins, digital euro, the European initiatives for account to account payments everywhere in the UK, in US, and not only in Europe. So we'll see what will emerge at the end of the day. Perhaps cash will survive. The only
Back to
method that will
cash.
survive is, still works. No batteries, no internet, no nothing. We'll see.
Yeah, but these are not extraordinary requirements, because at the end of the day, if you think about a business itself, what they want to do, they want to grab as much market as possible, do the payment as quicker and easier as possible. So, for example, we had a client who it was a crypto exchange, and they wanted to integrate a wallet which is serving the whole Asian community. And somehow the owner did not really understand that whatever works in India, it's not going to work in Nepal. You can't have a license which is blanket covers all the clients all over the Asian continent. You do need to pick and select your market and slowly introduce your wallet services to certain areas. And this is not really understandable from a business perspective, because today everything is online. It doesn't matter if I am in Malta or in Cyprus or in Delaware to actually do the business and offer my services to the whole world. But somehow the regulation is still restricting you that no, you can't target the whole world, only this country or only that area. And then you still need to figure everything out when you want to expand. So maybe that also, adds to the complexity. But if you're talking more on the future, we are adding more extra layer of difficulty, which is the AI, the agentic commerce, and with the futuristic hope that it's no longer you who is making the payment, but actually your AI agent. What do you think about it? Are we opening a Pandora's box of adding complexities to the already maze, or is it going to optimize things and make life easier?
I'm still sitting on the side chair at the table and looking at this, being deep into the industry, into the subject. I have my sincere doubts. There are a lot of things if you talk about agentic AI commerce, that everybody is buzzing. I did some articles on that also, writing about the issue. When we talk hype, usually it's a non-critical discussion. Like, this is fantastic. It's going to change the world. This is the best thing. Like, what does it do? But it's going to change the world. It's the best possible thing, Okay, but give me an example. Why? But, there is definitely, there are niches where this agentic commerce is really like perfect, really eliminates a layer of friction. And I think as long as the human nature is like that, where you really want to experience something, to see it for yourself, to make choice, that parts are not going to be so easily migrated to the agentic e-commerce. The purchases where the user experience is irrelevant, where it's just a pain that you need to, repetitive purchases or some things that really doesn't require your input, that could move to that part, all the subscriptions and everything is being handled differently today. But look, I don't have a crystal ball. I don't know what will happen in 10 years. Perhaps, the people wanting to interact in any form will be dead, and they will just want that black t-shirt being delivered to their door without choosing the size, the material, whatever. But for a scale that everybody's talking about, like it's going to wipe out everything, it will only be agentic. I mean, mentality of people needs to change. I was last year, I was in US, in Silicon Valley. There is a plug and play. It's called the Large Accelerator, and they have like a Silicon Valley Summit. And there was a lady from TUI. She was a board member, chief marketing officer of TUI, the large operator, traveling. And she was talking about this, and this is really interesting what I heard from her. Like, they were really in early days on ChatGPT, on all the LLMs, and they went like full on this experience of, can you recommend me a trip to Maldives, BAM, TUI, everything, purchase. And they said that conversion rates were like 2%, 2.5%. And remind me, this is 6 months ago. And what they did, we decided to rebuild our website. So we did a new website with more personal experience. So they didn't phase out the website and move to the AI agents. They did the opposite, because people use that to do the research and everything and preparation, and then went to our website where they could have the experience, personalized experience with recommendations, seeing everything, handling everything. Yeah, that way, agentic AI commerce is really going to blow up. We'll see. For now, it's important, if you talk from the technology perspective and what we are doing, we are API first. We don't know what will happen tomorrow. So let's open the gates, and when the time comes, that we are ready for that.
Hope for the best, but prepare for the worst, right?
Yeah, we'll see. I'm still waiting for the proper real use cases that are showing benefit. I haven't. Usually I do a comment on some of the LinkedIn influencers that are writing about that, asking for it. So nobody replies. Like, okay, just give me the real life example. Nothing.
You think the middleman will disappear? Because now we talked about, the ISOs, the PSPs, the gateways, the introducers, the payment orchestrators, so everybody in between. You think this agentic AI might have the opportunity to connect acquirers directly to the merchants, and everybody in between is going jobless?
Well, that depends on how the acquirers will look at that. Do they want to insource the processes again? They will offset it to AI. We still need to see the large scale implication of that. We can experiment and we can, play with 10 transactions, 5 merchants. But, Victoria, when we start processing 500-600 millions of transactions during Christmas time at peak day, something goes wrong. It's a hellhole. So I don't know if acquirers are ready to go there, to pull the switch, saying, okay, everybody go home. AI is handling this. We are directly connecting to merchants. We don't need anybody.
Merry
I'm not
Christmas.
that. The,
We're gonna figure it
yeah, Merry
out in
Christmas.
January.
That's it. Yeah, yeah. Sorry, it doesn't work for the next 2 days. We'll see. We'll see how this will evolve.
Yeah. I just wanted to ask that, is there something that you would like to add that we haven't touched? Because I felt like that we are going so deep in this conversation, but there are still a lot of questions I would ask. But what do you think? Is there something that we haven't talked about that we should have? Or is there more to this once we are going down the rabbit hole?
Well, we haven't talked really, we talked to multi-market complexity and everything, but we haven't touched that much on the omni-channel approach that is very important. And perhaps, to emphasize really the difference between the e-commerce and the physical channel in terms of complexity, but it's still necessary to have both. If you are a street retailer, you need both channels. You need them to work. And we haven't touched the part where I think this is important to say ISO, PSP, and everything. So when you're ISO, you are depending on the data coming from your acquirer or the gateway that is reselling. You don't hold the data.
Yeah.
At the moment, and this is what we see with our clients, at the moment that you have your piece of front-end infrastructure, data flows through you. You have everything, all the transactions, all the details on click. And that is really, really, really something that is a huge value today because you can build on that. I mean, we mentioned AI. You can take AI, you can build on that. You can do personalized campaigns. You can, create profiles that you can sell legally, of course, on the GDPR and everything to potential advertisers, other retailers, etc. There is so much more to monetize from that. If you don't control it, if you don't own it, then you have to wait each week for a report from your provider. This is a big difference, in my opinion. And this omni-channel approach is important for merchants because they have a one-stop shop. They have one dashboard where they can see everything, their transactions, their volumes. They can plug it into their systems. They can plan cash flow. There are so many things they can do with that. And this is like a gold mine that more and more, one of the main reasons why more and more ISOs are also turning to own their own stack.
And I can see that at one point we are developing with the speed of light, and there are new technical innovations and new tools and integrate that, and new payment providers are all coming out. But at the same time, I still see some clients who are doing manual reconciliation. So there is a huge gap between the how it's supposed to be and how to take the most out of the innovation, and then actually the reality when the poor little accountant is still looking at the PDF that they get from their payment provider, trying to balance it with the CRM system manually. And I'm sad to say that it is not even uncommon. It is more common than we would even think. And I think that could be one of the biggest challenges too.
No, definitely. I would tell you even the worst example. So in our system, we have the ability to replicate the receipt, the payment receipt, not the bill, but the payment receipt from physical point of sale. You can reprint it, you can share it on email, because that's still a thing. Many merchants are printing them out, and at the end of the day, they are comparing everything with that stack of paper receipts, and if they're missing two, it's like end of the world. It's 2026. You would say Android terminals and everything. Like, what are we talking about? But yeah, some things need a lot of time to change. Like you said, an accountant manually taking things from PDF. AI will play a significant role in those parts. Definitely automating all those cumbersome processes, and just either API integrate to the AI system and I will spit you out whatever you need, or just feed me with PDFs or whatever. Perhaps we forgot to mention the advantage of this setup of PSPs and ISOs in front of the acquirers. And with our clients, they are much faster to react, to innovate, to introduce things. Because if you have only the acquirer in behind, if you're connected directly to them, any request you have can take years I mean, they are tankers. And all these organizations in front, especially on their own stack, they are speedboats. They can react much quicker, and they can adapt to your requirements. And that, in a fast-paced world like today, that means a lot. So
That's right. But only for those eyes who understand where to look, right? Because if your accountant still makes all these decisions over payments and banking and customer experience and compliance and finance and tech and APIs and integrations and tokenization, then good luck to you. You're missing out on a lot of things. And that's one of the reasons that we are raising awareness.
and somebody comes and said, let's move away from this bank. They're using Swift. Let's go to stablecoin provider, and then everything falls apart. Yeah, that's a topic that needs to be addressed. Also, at the beginning, we said you need to know the whole circle, because when you tap your card and money lands on the merchant account and is taken from your account, there is a pot in behind that is also affecting payments, and stablecoins are slowly creeping in that part too.
Yeah, that's true. Yeah, but only if you know how to use it, because there is always a clever friend who is telling you, just put it through crypto, and then you need to deal with the consequences later.
Yeah, the FX and everything, yeah, definitely. But yeah, payments are, look, at the end of the webinar, people, I hope, will make a conclusion that payments are exciting. Actually, there's more than it meets the eye. Yeah, definitely.
Definitely. There is no two days the same.
No.
That's right. And always new challenges. But I would like to encourage everyone, don't be a stranger. Please share your comments, your story, your questions, your ideas, your fears regarding payments and banking, because that's the only way that we can actually create an ethical and transparent industry when everybody knows what's happening and we start talking about the importance of how money moves and basically how this very complex world of payment and banking actually works. And thank you so much, Goran, to be with us here today. I think
it was a pleasure.
I'm doing the right thing when I'm encouraging everyone to please reach out to you as well. You can see the email address on the screen. Please hit me up or just send an email to Goran. It's very easy to find us on LinkedIn or simple with a Google search. And please start talking about these things and give us all your questions and ideas, because that's what builds this industry further. Thank you so much.
Exactly. Thank you, Victoria. Talk to you. Bye.
Thank you.
Hey, welcome everybody. I'm Marcia Klingensmith. Instant payments is transforming the way money moves all across the globe, across all the different industries. A recent study showed that 42% of instant payment transactions actually happen on the evenings and weekends. About $200 billion is currently locked up in the European financial system today. And instant payments really can help unlock this liquidity. The future of finance is instant, and those who adapt will thrive.